Hello, everybody. This is Zeus Yamianis, Dr. Zeus Yamianis, author of Transforming Economy. And to follow up on my other video, this is April 19th, 2020. And I'm going to talk about the last week and what we can expect in the ongoing great economic transformation. I had called in the other video this the Great Economic Decline because I was giving people an understanding of what they can kind of expect on the macro level and how that's going to cash out for them and for the US economy, and consequently, of course, the world economy, since the US economy is such a large part of that. But right now I wanted to talk a little bit about more specifics. How is the economy going? How is it being rigged? How have the fundamentals been skewed? And what does that mean for you? So the first thing I want to talk about is how the actual Main Street reality of so many businesses closing and so many unemployment claims going in, now over 22 million, without the stock market seeming to really mind or seeming to mind. So let's go and jump right on into that. I'll get myself down into the bottom here. 5 million more people filed jobless claims last week, bringing the total to almost 22 million in 1 month. So somehow news like that, unprecedented news, worse than the Great Depression, not only barely gets a blip, but seems to send the stock market slightly up. Now, what's going on here? How can the stock market go up with news that is so devastating? Well, part of it is the fact that people think this is a temporary situation, maybe a couple of months. Even if that were the case, it's clear that demand goes way down. Financial banks and so forth have seen their revenues cut in half. We don't know how many small businesses are going to recover. Many of them are in peril. We've learned that the small business backstop from the federal government has run out. It's nowhere close to being sufficient to hold businesses even through a few weeks, much less a few months. So where is the so-called optimism here in the stock market? There doesn't have to be. The fact is the stock market has been uncoupled from the real market for some time. And it doesn't matter how much bad news there is. The stock market plays by a different set of rules. And the reason why it plays by a different set of rules, stay tuned and I'll let you know on that, has a lot to do with this decoupling between the Main Street, which is what I call the real economy, and Wall Street, which I call the fake economy. Now, the fake economy doesn't need things like productivity. It doesn't need customer service. It doesn't need quality, revenues, growth. All it needs is a manipulation of the stock market in order to get its so-called returns. Again, these returns can be converted into dollars, and usually those dollars are on the backs of the US taxpayer and on the environment and on the backs of the world's poor and working class. But let's look into this particular example because I've got some great charts to show you about what's going to happen. And again, we're going to kind of explore and discover this together because I've got some theories and hypotheses about what's going to come up this week. And we can check it against history to see what actually happens. Because at some point, the real economy, the Main Street reality of all these small businesses going down, all these people out of work, is going to have to intersect and impact the reality of the stock market, the unreality of the stock market. So far, the unreality of the stock market has been subsidized by taxpayer dollars and bailouts, but also this amazing amount of debt that is being loaded on to the basic taxpayer. We know in the US that you could have a working class or middle class job and have only one person working full time and support a family, own a home, and even own a car. Now we have two people working full time and they can barely afford even rent. So clearly something's been happening and building over a time, and I don't think coronavirus is breaking that, it's only exposing it. And once exposed, and once there is a little bit of run on the unreality of the stock market with the reality of Main Street, I think we're going to see some very interesting things happen, and I'm going to go over a couple of the things right now. So let's go ahead and go into the next situation here. one of the things that's very interesting to me is to look at the stock market right now. The stock market right now, and this is the stock market this week. And here's your bit of your anatomy of basic stock market rigging. I saw this when Apple stocks kept getting ratcheted up, and I'm seeing something very similar this week. If you look at this chart, this is CNN Business. The chart for the stock market this week. I'm gonna let you take a look at it and see if you see something kind of strange, because again, a few things should jump out at you. But here we go. Notice something here. There's a natural and normal looking curve going up and down here, and then all of a sudden, this is Monday, where we had a 1.3% decrease in the market, and then all of a sudden, and this is, I think, before and after market trading, it jumps up, either at the start of day or even before the start of day and after market trading, to this 24,000 level in the stock market, and then has this kind of devil's horns here, okay? And then plummets right at the end, maybe in aftermarket trading as well. Okay, so it went up a little, it went down. It looks to me like it was at the beginning of the day. Okay, so what's happening here? We're seeing this, and then it's leveling off at about the same place. You look at this line. This 23,250 is where all these points are coming in. So that seems like the natural bottom. Then all of a sudden, once again on Friday, yanked right back up again, this other kind of like devil's horn in here. If one is to follow this pattern one expects on Monday, there may be another downturn back to here again. It looks like these algorithmic trading numbers. And when I say algorithmic is machine trading, high frequency trading, trades that are done purely by computer calculation, which now account for, let me see what it says here. No, that's not it. Okay, algo trading, that's algorithmic trading, dominates 80% of the stock market. So people aren't making the decisions. These very, very fast computers and powerful computers are based on algorithms about when to buy and sell and trade. And they do it in such a way to me, even if they're making fractions of a cent, they keep multiplying that trade after trade, and that can run into some real money. And here's another point to make, and I'll go back to that other chart. This is in 2017, mind you, okay? The richest 10% of Americans now own 84% of all stocks. That's back in 2017, okay? And don't buy all the crap about, oh, more Americans own stock than at any other time. Sure, there are pension investments in stocks. Sure, Americans own a little bit through their 401k, their retirement plan, but they own a very tiny percentage of the market. It's crap to think that you have a great investment in the market. You don't. This, again, is more evidence. Algorithmic trading, 80% of the market is driven by that or more. It's probably about 90% now. 84% of all stocks owned by the top 10%. So you don't really have a stake in the stock market. And the only people that are really voting for right now are probably upper middle class, mostly professional managerial class that believes they still have a stake in the game. And you can see that sometimes in our electoral politics, in suburban people voting in that direction to kind of go back to a more stable system. Younger people wanting to get rid of the rigged system. But the numbers really don't lie here, in the sense that the stock market isn't being run for the full benefit of society. It's run by a tiny percentage of people for their own self-interest and increase their own concentration and percentage of wealth. When you look at these kinds of things here, you will notice these are not natural types of graphs. They're manipulations. They're algorithmic and sometimes even institutional. Well, not so much institutional. They want a steadier return, but sometimes actual people are trying to test the market. Okay. Now, mind you, we have 22 million unemployed. We have a shutdown economy for the foreseeable future. We have financial stocks down, or the revenue is way down. We have endangerment and the small business fund running out way before it should. We're talking about something like a coronavirus to the economy, and people are under-reporting it. Okay, they're under recognizing it, and they're under recognizing it because this system here is disconnected from what's happening. This Wall Street system is disconnected from what's happening on Main Street. It doesn't even care. It is fundamentally separated. Most people don't have these stocks. Almost no real people are making the trades. So what makes this go up and down are news. News like the fact that the Fed, the Federal Reserve, is willing to put 1.5 or buy up 1.5 trillion dollars of, or inject that kind of money into the system, or buy up toxic assets or distressed assets. Every single time over the last few years, as I explained in my last video, we are getting bailout after bailout for the worst kind of behavior. It's only accentuating and deepening the ability of this market, including its computer traders, to believe that they fundamentally are beyond reproach. There's no responsibilities, only money to be made. Every time they fail, every time they bring down the world economy and the national economy, they get bailed out. So they know that they have no downside risk ultimately, even if they make the worst decisions and tank the economy. Nobody goes to jail. Nobody ultimately loses money after the stock market crash of 2008, 2009. They're actually awarded almost record bonuses right after the crash. So again, we're having a massive, massive decoupling here. But there's some interesting things here. Let's go ahead and watch this. Let's see if this thing begins to play out into next week. Okay? Because I have a feeling that we are hitting a top here. At a certain point, like I said in my other video, reality is going to intrude. You cannot simply just have expectation and hype and the news that the economy is going to restart overtake the fact that even if it does restart, we have a fundamentally different economy. So that's what we're faced with now. My own sense is that we are going to see a big downturn, if not this week coming up, certainly the next week, as we begin to get the numbers in. And here's what's really important. There's an analogy here. The reason why the stock market is up because they are absolutely undercounting and making invisible and discounting and not even recognizing the actual pain and numbers of people in desperation and out of work, and what impact this is going to have on consumption, and what the impact this is going to have on people just surviving. The same exact thing could be said for the coronavirus. Right now, we're quote unquote reaching a bit of a top, okay, in our amount of reported coronavirus cases and deaths. And the only reason why that's the case for the most part is because we are actually reaching a top in our testing. It's not like we have fewer deaths. It's not that we're having fewer cases. It's that we're having fewer of them reported. So even if the number is skyrocketing over the amount being reported, that is just not being acknowledged in the whole calculus here. The stock market is doing the same kind of thing. You look in Mexico, actually. They have only 500 reported deaths in Mexico. 500. They're doing so much better than we are. That's 1/60th of what we're doing. But the reason is they're not taking any real great measures. There is no quarantining, and it's not being reported. So now, once that unreported stuff starts coming out, once it's clear that people are dying at a much higher rate, okay, then all of a sudden the stock market's going to have to notice. And even if the coronavirus does blow through here, because in California, we actually may have been exposed to it. They're actually scientifically investigating this in December and January. So we actually may have more of a herd immunity than we think. It's still going to be devastating because the small businesses and even the desire to consume after people have been home with their families and in their communities and wanting to get off this rat race and looking for an excuse to do so will not return to their normal way and lifestyle, which is this frenetic, addictive activity that I talked about. So here we are with a real opportunity. That's why I'm beginning to call this, the other one, the decline, but I will call this one the transformation. Again, my book's called Transforming Economy, and I encourage you to pick it up. I will put a link, an Amazon link in the below thing for you to click into that if you'd like to purchase it. I'm also thinking of doing a YouTube series in which I actually read the book with an updated commentary. So just to make it available for people to use. So look for that as well. So here we are. Now what's going on? I'm clicking on the gold market right now, and the gold had an interesting week here. But what I think is most interesting about gold, again, this is goldprice.org, and this is John Moncrief's article reviewing the week. It had a pretty rocky week, but you can see that it skyrocketed about 100 points. And in this case, almost a day. One of these days, or at least in a few days, it skyrocketed 100 points, 100 and more plus points. Now, why is the stock market at a high level and the gold also going with it? Usually these two move opposite each other. And in fact, some of the sell-off in gold is people trying to get cash out their gold in order probably to pay for margins in their stocks or to get out of the market altogether. This says to me that the smart money, the insiders, the wealthy people understand where the market's eventually going to go. They're selling their stock, just like those senators did before the coronavirus really got out into the public. And they know cash. Mark Cuban is one of these billionaires, with whom I respect quite a bit. He's one of the few people I respect in terms of his no-nonsense analysis. He's moved from stocks into cash. And frankly, if I were to advise a friend, I would do the same. I'm not advising you to do that because I'm not an advisor, and this is not any kind of financial advice. I'm just here to help you make your own decisions based on my opinion, not any kind of expertise, even though I've done a lot of study. I have my own particular ways of looking at this. And if it resonates with you, you can take what you need and use it for your own analysis. Never substitute your own analysis. Do not act out of fear and do not act out of greed. Act out of an understanding of what your deep needs are. And then if you have a financial advisor, or if you do your own financial advising, maybe use this analysis as part of a portfolio of information analysis to make your decisions, your financial decisions. Again, use your own mind, use your connections to get a good grip on this. Don't go with fads. My personal understanding, though, is that this market is fundamentally decoupled, and there is no way that the market, in my opinion, can go much higher than it is now. I'm personally very bearish on this because, again, at some point, the actual real economy has to come in to this fake economy, this fake stock market. So what we have now is a kind of lag where the stock market is using indicators and news that have very little to do with what is happening in the real world. The way I liken it is this. It's almost like George Bush Jr.'s response when Katrina was a Category 5 hurricane just off the coast of Texas and Louisiana and so forth. You know it's going to hit. This 22 million unemployment, these small businesses all in peril, people not being able to rent, that is a Category 6 hurricane, okay? It's already there. It hasn't hit landfall in the sense of perceptions of the minds of the stock market, but it is going to hit, or it's going to finally be recognized. It's already hit Main Street America, but the insulated Wall Street that doesn't even seem to give any crap about mainstream America has yet to pick it up, but it will. And when it does, it's going down. It can't help but go down. Based on what? Look at all the things that have been thrown to them. 1.5 trillion stimulus, or basically just money poured into them. Assets being brought up. Zero interest rate policy. Interest rate of the Fed being brought down to zero again. Repo rates, just unlimited overnight lending. And then finally, 500 billions of free money to do whatever they want to, that could be leveraged to about $5 trillion. And this is all we get. All we get is a little goose in the stock market up from maybe 22 to 2,400 or 24,000, sorry. That shows you that there's a limit to the artificial manipulation of the stock market. And if you have a stock market floating on air who's given all these advantages and it still doesn't go budge very far, you've basically seen your top here. That's what I'm thinking. That top is around 23, the non-manipulated top. Of course, the manipulated top's around 24 and a little bit more. But as I said in my other one, I think this is going down, and when it finally capitulates, it'll probably overshoot the basic fundamental level, which is around 15 or 16,000, probably to 12 or 14. That's my own particular thing. Again, don't take that to the bank. By my analysis, that's usually what happens in these kinds of markets. Usually there's an overshoot as the pessimism and the capitulation happens, as people are just panicking and trying to get out of the market, so they even go beyond or below the fundamentals for companies. And that's when it's a good time to buy if you're interested in buying in the stock market. Right now, if you're interested in safety, yeah. I'm going to talk about this in another video, but the 3 C's. Community is actually the most important. Invest in your house, invest in solar, invest in energy independence, invest in your family, invest in your community, help with food and so forth, and the elderly in your community. Those are the things that are going to create a real fundamental strength and resilience for real on Main Street and on the countryside in our country, in every country, including the United States. The other one that I talked about was cash. Cash is going to be stable. It's not going to lose its value in this way. And then finally, coin. And I would specifically gold and silver is what I began to trade in physical, stored, silver and gold. This exchange traded fund stuff is probably not worth the paper it's printed on. So those are the things that I'm doing. Again, these are not advice for what you ought to do, but it's something you probably should research. Ask yourself this question. When the stock market is this decoupled and this manipulated, and I'll give you one more example actually too. Back in 2014, when Apple split its stock again 7 ways, it was got up to about 700. Right in the middle of its step up, I saw something very similar to this manipulation. Every day I was following it. It would zoom up, come back to about half, and then go laterally. And then the next day it would zoom up, come back to about half, and then move laterally. Zoom up, half, and then laterally. And I just saw this. It just kept going. I guess it kept going up, half, lateral, up, half, lateral, up, half. So it was just climbing this kind of stair step in a very regular fashion. And I realized that's what's happening too. It was algorithmic trading to keep trying to test the boundaries, see if it could bring in a greater fool, okay, to support that higher price. And using this to kind of manipulate it ladder-like fashion, the stock up. It did come back down again after that manipulation, but I'm sure a lot of people made a lot of money. Look for these patterns. Look for these regular patterns that seem to go away from a natural looking graph, that seem to be really about a person throwing their money into there. I actually had a friend who was investing in a marijuana stock and accidentally bought, I think it was just trying to buy a few shares, and it had a lot of money in there. It ended up buying 250,000 worth of share in a rather small marijuana company. That was enough to goose that stock almost double. He realized his mistake, took his money out, made a ton of money completely by accident, didn't plan it. This person was older and just simply didn't realize what he had done. And he actually got a call from one of these government entities wondering if he was manipulating the market. He wasn't. It was a genuine mistake, but you see, just from that example alone, one investor with only $250,000 can actually double the price of a small marijuana company. If that can happen with that amount of money, can you imagine what could happen with massive computers, with massive millions and trillions of dollars to spare, going ahead and using that kind of manipulation? A lot of people don't know this, and I'll end on this. Stocks for a long time have been decoupled from any kind of actual product or quality. What they are only interested in and only responsive to is how many people buy them. So what ends up happening is that when you get cash or borrow money at 0% interest, you can literally buy your own stocks up, buy them back. It's called stock buyback, and goose the price with no increase in the capacity of your company, quality of your company, growth of your company, zero. You literally can manipulate the power up simply by buying up your own stock and using your own company as collateral. And this is favored by many CEOs because they get paid more when the stock is higher. So we're now going to begin to have a return to reality. And this return to reality is going to be bumpy. Don't be caught in it. They're always looking for a greater fool. If you look on CNBC or this financial network, they will always say the same thing to you, the middle class or working class person. Oh, this is a hot stock. Oh, we've reached the bottom. Baby, we've reached the top. Okay? I believe right here is about the top right now. We're down at about our second cascade. Okay? And there will be greed involved in this. So when it drops significantly, I think, like it did to 18.5, you're going to get some people to pile on and think, hey, I might have a value here and I'll jump on. But stay out. That would be, and not again my advice, that would be my warning to you. Okay? Think about staying out of this market. Think about just bringing it back into cash, tailing away from the addictive, attention to the stock market, and addictive, as we have been forced to tail away from addictions to all our activities and going out to restaurants and rallies and who knows what else. And use this time to be reflective. Use this time to see where the real value is. And I'll talk about that in my next video on the 3 C's, community, cash, and coin. And until then, it's great talking with you again. I hope this has been helpful. Until next time, this is Zeus Yalmianis again. Go ahead and pick up my book if you can. It's more relevant now than ever. It's called Transforming Economy from Corrupted Capitalism to Connected Communities. I'll put the link below. And again, appreciate your time and the time you're taking to listen. We'll talk to you later. Bye-bye.